The stock market has been very volatile since late 2021 due to high inflation, raising interest rate, slowing economy, and now the fear of a looming recession. The tech-heavy Nasdaq is already in bear market with around 25% drawdown since its highs, and the S&P 500 index is down about 14%, which is in deep correction state. This is an extremely painful period, especially for stock investors who see their stock portfolio evaporates essentially as the market continues to go down. And some investors, or they call themselves investors, even go to the length of selling out the entire multi-million-dollar stock portfolio and become stock traders. Hi, my name is Louis and welcome to GENF Money. Today we'll be going through the pros and the cons of stock investing to see whether it still makes sense to invest into the stock market in year 2022. This is a part 1 of the 3-part video series where we'll be going through the pros and cons of stock investing versus trading and then compare the two to see which one is better. If you're interested in this kind of discussion, please kindly click on the like button and subscribe to the channel. Without further ado, let's get started. Firstly, what is investing? I think in general, when people are talking about investing, they're referring to the activity of buying company shares with the intention to hold on to them for a long period of time. I mean years, long period of time. People invest in certain stocks because they value the underlying business. They want to earn a small portion of these companies in order to benefit from its long-term growth. The great Warren Buffett had a very famous quote, "Our favorite holding period is forever." He famously bought the Coca-Cola stock back in 1988 and never sold a single share. For the past 34 years, the stock price has grown around 2,500% to date. That's tremendous. So now, with the basics out of the way, let's have a look at the pros and the cons of stock investing. On the positive side, stock investing might be the best way to beat inflation and to grow wealth over a long period of time. This is even to include the numerous recessions and stock market crashes along the way. Historically, stock investors who bought and held shares issued by great companies will see their investment grew exponentially over time. Let's have a look at the Apple stock during the dot-com bubble era, where the share price dropped 83% from peak to trough, or the 61% drop during the 2008 Great Recession. These were no doubt devastating period at the time and were extremely painful for shareholders. But if we fast forward to today, those who simply held the stock since the dot-com bubble era saw their investment grew 75,000%. That's 750 times their investment. And the stock is up around 5,000% since the low of 2008. These crashes were merely a couple blips in the history of one of the best stocks to invest in. Another advantage of stock investing is the low barrier to entry and the low maintenance. I'm certainly not saying that stock investment is easy. It is not easy. But once a good stock is identified, what essentially is left to do is to regularly buy into the stock, dollar cost averaging, and never to sell unless something fundamentally changed, such as the company fundamental or the investment strategy or horizon. There is simply no need to worry about what the market is going to do in a shorter period of time, as long as you're on top of the company's business fundamentals and the business trajectory. For investors who found it difficult to pick stocks, they may choose to invest in ETFs, mutual funds that track the overall stock market. For example, SPY and VOO both are ETFs that tracks the S&P 500 index, and both funds over a longer period of time managed to generate double-digit yearly growth on average since the inception. I mean, that's amazing. Essentially, you just leave the professionals to do their job for stock picking and managing the portfolio, and you are able to pull double-digit yearly growth. How great is that? One more advantage of stock investing is the opportunity to generate hassle-free passive income. Many companies out there use dividend payments, essentially cash payments, to reward shareholders for simply hold on to the stock. This makes dividend investing one of, if not the best way to produce passive income. Yeah, of course you can generate passive income through rental property investment or running some sort of online business such as selling courses or monetizing some sort of tools online. But instead of having to deal with bad tenants or paying the endless bills and fees or spending a tremendous amount of time developing IPs that are monetizable, through dividend investing, you're essentially getting paid for doing nothing at all. If you are interested in the idea of getting paid by simply holding on to quality dividend stocks, I've recently made a video talking about the 8 elements that can help you pick the best dividend stocks, and I will leave the link over there and down the description box down below. Check it out. Okay, now let's talk about the potential downsides of stock investing. And yes, there are downsides. Historically, with enough patience and time, the long-term buy and hold type of stock investors will almost always be making money in the stock market with long enough time horizon. But the keywords here are really the patience and time. Even though the US stock market has grown significantly over the past 50 years, in a shorter period of time, there's just no telling whether the stock market is going to go up or down, just like what we are experiencing right now. Stock investors will need to be patient and have long enough time horizon for the investment to perform over time. Only invest with money you don't need to access for a long period of time. Another challenge for stock investors is to go through the emotional roller coaster. In a shorter time frame, we all know the stock market can be very volatile with large price swings, especially in the past couple years. Many beginner investors will make the mistake of buying stock at a higher price due to fear of missing out and selling the stocks at a lower price due to fear. And this can be very detrimental to any investment portfolio. Instead of taking emotion-driven actions based on the stock price swings or price action, trade your investments as earning part of a great business, part of a great company, or earning part of a growing economy and advancement of innovation. As long as these are solid investments, just leave enough time and room for the business or the economy to do the work. Don't tinker with it. Don't play around with it. Just give it time. Considering all of the pros and cons we just went through, it is still a good idea to invest into the stock market in 2022. I think a lot of people have very different opinion, and I would love to hear your thoughts on this. Please comment down below on whether you think it's still a good idea, whether it's still a smart idea to get into the stock market in 2022 under the current market condition. Here are my thoughts on this. The US stock market has been selling off since late last year, with all of the high multiple, high growth, non-profitable stocks were selling off since the beginning of last year. Yes, we are facing quite a bit of challenges, but I think a lot of the challenges, let it be high inflation rate, raising interest rate, the Ukraine war, and even now China lockdown, most of these have already been baked into the current market. The only thing that haven't been really priced in is essentially the recession. But are we going to have a recession? When are we going to have it? I think nobody really knows. Will the stock market continue to go down? Maybe. Maybe even more likely because there are just so much negativities around. But I do know one thing is historically, no matter what kind of recessions or market crash there will be, all of them eventually will pass. followed by a great bull run, right? In hindsight, most of the best investment opportunities will be during these downturns, will be during these challenging periods. So for me, with around 25% of my portfolio in cash, I'm slowly but surely positioning to the companies that I always wanted to get in, now with a slight discount. I'm buying into these companies again because I believe in their business fundamentals. I value their business. I think that over a long period of time, they will generate much greater return. So this is how I'm approaching investing during the current period of time. I'm definitely not all in. I'm taking time and be patient and be selective when picking these companies that I want to invest in for the long term. Alright, I hope this video has been helpful. Please do me a favor by clicking on the like button down below. This will greatly help the YouTube algorithm. And please subscribe to the channel for more videos like this. For the next video, we'll be talking about the pros and cons of stock trading, right? Whether stock trading is an option for you. Stay tuned. Until then, stay invested, stay positive. Cheers.